fast. I actually just had it happen the other day when I was walking into Starbucks. Some guy came up and goes, "How do you have such a good body?" And instead fast. I actually just had it happen the other day when I was walking into Starbucks. Some guy came up and goes,
Live TV from 85 plus channels with local sports and news. YouTube TV. Try it free.
Generations, the Jedi were the guardians of peace and justice.
Oh, what's up, man? I'm good. Mm-hmm. Uh-huh. Oh, you know what? Did you mute? Do you have like the YouTube up as well? Ah, okay, okay. Because that's what was giving me my echo. If you don't have that, then that's yeah, it's interesting.
All right, guys, good evening. Hope everybody's doing good. Trey Campbell coming at you live here from Steel Mountain Capital, and I'm glad to have you guys in here. We got a pretty good crowd in here tonight, which is good. It means that we are at least getting the word out there. You know, that's the important thing. We appreciate you guys and appreciate you guys coming out and hanging out with us while we go over some things. Neil's with us tonight as well. There he is. He's popping in and out throughout the strategy here as we go over kind of a New Year's resolution strategy that we are going to be kind of implementing throughout the year. And we've kind of shifted our mindset. Neil and I both have as kind of a, kind of decided this together. We still love to day trade. Obviously, we have the bot trading for us in the futures market. And we'll go over the bot here also while we're on this little live event here. Even though it's not really about the bot, we definitely want to give everybody an update that's here, that's with us and the bot. So with that being said, this year, Neil and I have kind of taken a step back from day trading. Last year we were pretty heavy day traders, and of course I'm not speaking for Neil. I'm just kind of grouping us in that because we've talked about it, and for myself I've decided, and I know Neil has too, at least for the majority of things that he does, is that we are going to be kind of shifting our way into more of an investor kind of outlook. And that doesn't mean we won't be active though. And with that, we have decided that we're gonna start getting in some dividend stuff, start kind of just spreading out. And so along that adventure, I got to talking with Broken Strife, who is a member with us in Discord. If anybody's here that's not in Discord, let me know. I'll send you a link. But anyway, Strive and I have been talking back and forth for some time as he's been trying to educate me on why I should be implementing options to my trading strategy. Well, it was just too much. The numbers, everything was just I don't know. It just seemed just ridiculous to me. Like I just could not get to it. And then I finally just sat down and started just just say, okay, let me just slow down. Let me just try to think like a longer term investor dude. And, you know, and the more I sat down and started thinking about that, and trying to realize that, you know, that's where the real money's made. This is, you know, what we're going to teach tonight is exactly how, sorry, my daughter's got the giggles. But we, you know, it's exactly the same way Warren Buffett trades. Not exactly to the T, but it is definitely one of the strategies he uses. So the more I broke it down and everything, the more I figured out that, wow, this is the brilliant most way to trade, and it's going to be the way that I trade from now on. And from this way forward, I will still day trade futures and get into the whole futures trading thing with the bot, of course, and that's our main outlook for the future as far as Steel Mountain Capital, because we're always developing those things. But as far as, like, you know, just sitting capital that's not being traded in that, what do you do with it? So with that, I'm going to get started on this unless Neil has something. Hang on a second. I'm actually going to mute my microphone for a minute, Neil, if you want to kind of echo that. And I'm going to silence my room here, and then I'll be back with you.
Where this is going to help us. So, you know, what we want to do initially is, obviously, we want to pick a company that is going to be going to be it's gonna have volume, it's gonna move, and one that we're going to want to invest in long term anyway, if that happens. So so Trey's gonna take you guys through like what is called the wheel strategy, and I think he's back with
Yes,
us.
I am. Sorry about that.
No, man, it's all good, man.
I try to pick a good time where I know everybody's settled down, and it just doesn't matter what time I pick. It just it always happens, man. It always happens. So all right, so I'm gonna walk you through. Let me get the comments back up here so I can see what's going on here. All right, so I'm gonna walk you guys through kind of a simulation trade that I want to just kind of get you started on this, so you at least let your brain think about it, and then we can go from there. So what I was looking at right now is a company, well, it's a blockchain. It's Riot, RIOT, and let me just click over here. I want to show you guys this stock. So that's BA. Let me get back over here to Riot, not Rio. Okay, so we know that this is trading at currently at $25.78 here, and let me see if I can. There we go. Pull you up a full chart there, because we always start with charts. Technical analysis. It's no different than normal trading. All right. My goal with this chart right here is to look at it. Riot has a lot to do with crypto. So it's a way to, obviously the cryptos are going out of sight. So is Riot. And I want to be involved in this Riot. So but I don't want to be involved up here. You know, I'm looking at it and I'm thinking, man, I would love to get involved in this, but I got to wait till a pullback. You know, I have to wait till, this thing pulls back to, $19 or something. That looks like the first line in the sand support to me. Old resistance, which was right here.
Yeah, it's kind of where I'm looking at this chart with you too, and I'm seeing.
Yes.
Like 19 is probably where I'd be looking to get in.
So
like $18.50, $19.
Yeah, so let's just put us a line in here. $19. That's like 1905, but you guys get the idea. And that's like, okay, I want to be a player at 19. This is where this strategy is the bomb, because now what you can do is you can say, okay, I don't want to get involved here, so I want to get involved here. I want 100 shares at $19. So what you do is you just simply, you're going to go to your option chain, right? And you're going to go out at least 30 days, which this one doesn't tell me, but I'm going to guess it's around February
21st.
February
19th.
Okay, the 21st is the closest one. So, and you don't have to go out 30 days. It's just, sometimes if the premium is paying good enough, you can do it in a shorter time frame. So, so don't think that you have to go out 30 days. But anyway, if you look right here on the $15 strike, it is paying 61 cents per share to you, just to put the liquidity out there, just to put your stamp on something saying, I promise to buy this stock or ETF or whatever at $15. And that's essentially what you're doing. You're telling them that you're locking in a price, and by doing that, they're willing to pay you premium to do that. And on the flip side, somebody selling or buying a put is basically betting that the market would go, to that level. So they would be in actually an out of money.
Money
Well, they're purchasing the put, so they're betting that it goes to 15. So they're basically saying that they're going to pay $88 to bet that it goes to $15 by February the 21st. Actually, this is February 12th. So I'm on February 12th. Let me go to the 21st here. Oh, I guess the 26th. So let me go to February 19th. Sorry. Let me redo that a little bit here. So the 1 month out, close to 1 month, is actually paying 96 cents. And it's $100 to bet that the price will be at 15 or below in 30 days. So that's a good bet for somebody. They pay $100. If it goes down below, they make a whole lot more money. They make a lot of money. For me, I'm selling them they're actually getting it costs them $100. That $100 goes to me because I'm taking the other side of that trade, saying as an investor that, if price goes to 15, which we've already got the line right here, right? So we know 15, and I said 15, 19. Sorry, geez, my mind is just way off tonight. I don't know why I'm stuck at 15. $19, okay, is paying $2.23 per share. Now, an option represents 100 shares. So if you were going to say, okay, I'm a player at $19 in the next 30 days, they're basically going to pay you $2.23 today, like right now, which is $223 that will be deposited to your account as soon as you place a trade, just to say, I will be a player at 19 if it's at or below $19 in 30 days. Now, what we call being exercised or assigned is exactly that. It's basically the price is at $19 or below. So at the end of your term, you actually get the assignment at $19. It could be trading at $14 and you're going to own it at 19. That's the downside. But you were comfortable buying at 19. So you collected the $223 up front. And what you do from that point is what we're trying to do is we're trying to look at this as a cash flow business, kind of like having a convenience store where you have supply and then you have customers coming in and just money going out, money coming in, money going out, money coming in all the time, right? So that's what we're trying to accumulate as a long-term investor. So we want to get paid $223 today. And they're gonna pay us $223. If the price stays above 19 in the 30 days, you just keep the $223, and that's just the cost of doing business. So you just keep the money, and it's a good deal, right? You keep $223. If the price is at $18, you keep the $223, but you are in at 19 and it's trading at 18. So you're $1 down. But here's where the best part of this trade strategy comes in. While it's down, if you get exercised or you assume the shares at $18 and your strike was at 19, and you're $1 in the hole, you instantly, once this is done, you instantly can do what they call covered calls, which means that you do the exact same thing and start collecting premium on the sell side of your 100 shares, because now you own the hard asset. You can actually put out covered calls where you can say, okay, if price goes back up to 20, if you're in at 19 and you say, okay, I'm comfortable selling my 100 shares at $25. So you could actually go back up and say, okay, on the next 30 days, if I was to watch this thing travel back up to $25, I'll sell it. So not only do you get to sell it for the $25, which is a $6 gain or $600, you also get to collect the premium that you sold that call on. So let me go over that example right now. So you're looking at right now, we have to do this at current price, not at the $19 strike that we originally had, just because we're assuming that we own the stock at, let's say, $25. And if we own the stock at $25, we would want to say, okay, I'm comfortable selling this stock at $30. All right. So what you would do is you would click on sell, and you want to sell the call because you own the hard asset. What you're doing is you are telling them that you are obligated to sell if it is at or above $29. It doesn't matter if it's $35. You still have to sell whoever bought the other side of your call that at $29. So that is the only downside of that. You could, potentially lose a lot more upside by going ahead and locking in your profit. But check this out. All right, just for doing that in the next 30 days, your premium is $465. So in a 60-day round trip, you've basically made what was this one? $223 on premium here. And then basically you turn around and made $465 on premium. And then on top of that, sold the stock for $5 in profit, which is $500. So instead of just making $500, you have turned around and you've made $465 and $223. So what is it? $1,200 and, well, pretty close to $1,200, maybe $1,100 and some change, instead of just $500. And you've protected yourself on the downside. So, and the reason I say that you protected yourself on the downside is because the whole time that you own at 19, you're selling covered calls. So you're completely collecting collateral the whole time, or premium, excuse me. So you're collecting premium. Let's say 30 days, it goes by and it expires at 17. Well, you're still in the red on your shares because you still own the 100 shares at 19. It's trading at 17 now. So then you would cover the call at, let's jump back up here to the current price at 25, let's say, and let's get a little closer to the strike, and let's do the next 30 days for this one, is paying $570. Now, that's just on 100 shares. So you got to think about this. If you're going to invest long term, and you're not doing it for today or tomorrow, you're buying the dips, you're buying at the places that you should be buying. It's not always going to be in your favor. So you can actually use the option chain to accumulate continuous money flow every 15 days. If you're trading in a higher dollar stock, like if you've got the capital, or you're trading a margin account, or if you can get up there in the higher end stuff, like BA was one I was looking at earlier. You can go out, if we were to go out to the 19th of February on it, and I mean, you look at these buys, look at what they're willing to pay you for 100 shares at 170. Now, I had a strike down here at 158, I think, because that was a gap. So if you see the gap right here, I was looking at that earlier, and I was thinking, man, that'd be cool to have a strike right there around 160, something like that, And that was kind of where I was playing. They're paying $1.14 to go out to the 19th of February. So they're just going to give you $114 to basically say, I will assume 100 shares if it closes at or below. So, and you got to understand, once you assume the shares, that's when you really start making money. Because even if it's moving against you, you're doing covered calls. Look at how much more the covered calls are bringing. So let's say we owned this at $200 and we wanted to place a covered call. Let's say we were comfortable selling this at $210, which is $1,000, right? Because we have 100 shares. So we're comfortable selling this at $210. Look at this, $935 is what they will pay you on top of selling at 210. So you're collecting the premium of $935 just to say, hey, I will lock in this at 210 and sell it to you no matter what. Even if it goes to 250, whoever's on the other side is going to love you, because they're going to be buying at 210. You're going to sell those shares to them at 210, and it's trading at 250. They're instantly in the money a good bit. So it works for both sides sometimes as well. So, and with that, so you're making the $10, $1,000, and then you're collecting the $935. That's almost $2,000 on this trade. Now, let me go back, because I want to go over one more. Sure. Okay, let me start over. Thank you for that. Thank you for letting me know. Because, yeah, anytime you want me to go back over something, please let me know. I will definitely do that. That's what I'm here for. That's why I want to go over this, because I want you guys to understand so we can make money together. And so let me just start all over again. Okay, let's go back to Riot. All right, we're looking at Riot. RIOT. RIOT looks good. We know it's a volatile stock. It's a cheap stock, right? It's only 19. It's trading at 25 right now, but we're willing to buy it at 19. That's $1,900 for 100 shares. That's not, taking nobody to the cleaners. I mean, $1,900 for 100 shares is not killing anybody. Especially if you had a margin account. If you got a cash account, you got to have all $1,900 to buy those 100 shares. But we're investors. Remember, we're not day traders here. We're long-term investors. All right. And what we want to do is, we like it. The chart looks good. Mike, the chart looks fantastic. We're thinking, man, this thing's got some volume. I want to be a player, but I can't get involved with this stock right now. It's too up, and I just can't see myself buying this right now, because as soon as I buy it, it's gonna pull all the way back down to support, and I'm either gonna have to stop out, or I'm gonna be, layering in, trying to get that cost average down, right? Which I'm gonna go over that in a minute too, because that's part of the strategy as well. But let me start back over. We want to be involved. We see that the support is sitting there at $19, right? So the logical thing to do is to say, okay, let's just go back to day trader mindset for a second. What do we look at that and see? Okay, I will place a limit order there and just walk away, set it to GTC, good till canceled. So that way it can, I'll put a limit order there, and until I cancel it, it'll sit there, right? But what is that doing for you? It's not doing anything. It's not giving you cash. It's not turning a wheel. It's not keeping money flowing. It's not doing any of that. It's just a limit order sitting there. So instead of doing a limit order, what we're going to do is we're going to flip over to the option chain, and we're going to pull up. We're going to go to at least 30 days out, which is close enough to February 19th, right? And we're going to say, okay, I am a player at $19. For sure, I will buy this stock or ETF or whatever it is at $19. All right, so what you're going to do is you're going to click the bid side, which is the sell side, right? All we're doing is what they call net selling options. That's all we do. We don't buy any option at all. No option do we buy. There's a whole nother strategy to buying options on the call side and the put side. We can go over that on another day. This is not anything to do with that. This is an investor strategy. This is just to invest with. People who play on the buy side of options are just players that play just options. They don't want to own the stock. They just play the options. This is a strategy for saying, okay, I want to assume the shares. I want to be a part of that company. I do like the company. I just don't want to be in at $25.78. I want to be in at 19. All right. So by doing that, we're going to click right here. It is a put. So you see the put side right here, and you're going to go to the bid side, which is the sell side. If you got Webull on your phone, when you pull up the option chain, the sell sides will be green. Either it's on the call side or the put side. They're green. Those are the sells. And you don't want to buy a put, you want to sell a put. So on the sell side, you are selling the obligation to buy, basically. On the ask side, on the buy side of the put, you are buying the option to buy. So you see the difference there. On the sell side, you're buying the obligation to buy. On the buy side, you're purchasing the option to buy. It's up to you whether or not you want to exercise your right to buy at 20. On the sell side, you're obligated. You have to. You have no choice in the matter. It's a done deal. If in the 30 days it is at or below the strike price. That's the only time you have to purchase the 100 shares, if it's at or below. Okay. So we're going to pick $19 because that's the line that we picked right there. So $19 is $223, right? So we look right here, and you can see right down here, it says premium received, $223. They're going to pay you $223 just to place the trade, just to place the promise to buy the shares if they come down there. That's it. That's all it is. If it doesn't come down there, if it expires at 1901, right, on what was that? The 20
It's the 19th.
19th, the
February
19th. So if it's at 1901 on the date of expiry, you keep the $223, and then what do? We reset the whole thing and we do it again. And if it's at 1901, we can go 30 days out and say, okay, well, I don't want it at 19 no more. I wanted it,
Let's say $12.
Yeah, 14 looks good,
something. Yeah.
So we can go down and collect $200 more for 30 more days. And we can just keep this money wheel turning every 30 days. And if you do happen to get exercised, or what they call, it's called exercise, it's called assuming, assigning, there's like 2 or 3 different names for it. Basically all that means is that it went at or below your strike price, and the guy on the opposite side is going to assume your obligation, which means that you told him that you would purchase those 100 shares at $19. And he's going to exercise that right to call you out on it and say, okay, you said you would sell or you would purchase these at 19. So I'm calling you out on it. And when he does that, you're going to assume the 100 shares. Now it could be at $15 and you still assume it at $19. That seems bad, but it's not. It's not bad because
it's like a long-term investment. It's not bad. That's why we stress the fact, when you're doing this strategy, you pick a company that you want to own. Exactly.
And some companies pay better premium than others. Like here, I'll give you an example shortly. Like if you had the money to play Tesla, oh my gosh, man.
I'm sure the premiums are astronomical.
Yeah, I mean, you're making thousands of dollars just on playing premiums, But, you get exercised on that. You better have the money sitting there to assume 100 shares of Tesla.
Yeah.
Which is, 700 and whatever. I can't remember what the price is for Tesla, but it's, it's a lot.
It's up there. Yeah.
So
I could look real quick.
Let's just break that up. This is the first part. This is just the buying. I want to make sure that you understand that before we move on to the selling portion, because that's where we really start making our money. This is just collecting the premium on the front side. Because 90 to 95% of all options expire worthless. And what that means is, that means that the premium that you collected, generally 90 to 95%, actually pays out without having to assume the shares. That's a pretty good percentage, So yeah, $826 on Tesla. They're probably paying 2, 3, 4, 9. You could probably go like a week out and get a $8,000 or $9,000 premium on Tesla. So, but like I said, you better be willing to assume 826.
So let's say you wanted to get involved on Tesla. I would have to pull my
let me
the amount of options that I have in the chain, but I let's say 755. Let's say $755 on Tesla is an area where you're like, okay, I don't mind getting involved in that company at $755. You're looking at collecting a premium up front of $4,700.
Yeah.
I mean, you could probably go even lower, which I would probably want to go lower. I'd probably want to go to 735 would be where I would probably want to get involved, which is, just a little bit below the 20-period moving average on the daily chart. So 735 would be where I'd be looking to get involved, and you're looking to collect a nice $4,000 premium.
Yeah, you see that right there. I got it posted up now where you can see it. It's paying you $4,000 just to say I'm willing to buy Tesla at 735, which is right here, and that's within the next 30 days. So as long as it's at or above there, you're going to collect that $4,000. Now, here's the best part. If you have the money to assume such a stock as Tesla, and you were in at, let's just say, $826, because that's where it's trading at right now, and you were saying, okay, I want to get rid of this at 850, you could start selling covered calls for $7,230. And if the stock doesn't go to there, you just keep the $7,000. And if it does go there and you get exercised, you have to sell those at $850. You've made $25 on the stock. Plus, you keep the $7,230. So that's where you start really making the money. It's when it's exercised. But I got off topic. Let me go back.
Go back to Riot.
Yeah. I don't want to lose you any further than Mike. I want you to understand what we're doing. So I'm going back to Riot. I'm using Riot because it's a very volatile stock right now, and it's got really good premiums. If I pull up GE or some stock like that, the premiums suck. So you have to be really aware of what stocks are paying good premium, what stocks are not. And right now, Riot is, it's where the money's at as far as being a cheap investor. You can get in cheap. You can kind of play with it cheap for $1,900. It's not so bad. So, all right, if you don't say anything to me in the next 5 seconds, what I'm going to do is I'm going to go over another strategy. I'm going to put another buy strategy on top of you. All right. It's 7:36 now. I'm going to try to wrap this up by 8 o'clock. So I want everybody to understand. I can stay longer. I just don't want to keep anybody on longer than they want to be. I don't want you to start dropping off, is what I'm saying. I want to end while everybody is still interested. So if, and like I said, you don't have to go 30 days out. If the premium's good in 15-day range, there's plenty of guys that even do a week, but they're usually trading on margin, or they're trading in stocks that are, like Apple or $100, $200 stocks where they can still collect $200 or $300 for that week on the premium. So anyway. Okay, the execution and the buy. Okay, so you got the covered call part is what you're talking about. Thank you, Strife.
Oh, okay, yeah. So Mike's just a little confused with the and let's say Riot executes at our $19 price, right? It falls down to $19, and at which point we are now assuming actually if it goes under, it's got to be 19 or below,
right,
and then that option to basically assume those 100 shares is exercised, which means that now you own Riot, 100 shares of Riot at $19.
Yep.
You still keep the premium because the premium is always paid to you ahead of time. So the premium stays with you. So you keep that premium. So I'll keep a running total of that premium in your head. So now you have these. You have Riot at $19, 100 shares. At which point, now you have the. Now what we try to do is now we're placing a call, a covered call, because now we have 100 shares. So we want to place a covered call, and we're assuming, let's assume that we fell from $25 with Riot. So we're thinking, okay, more than likely we're gonna go test those highs again. So we could place a covered call for $25. At which point, if $25, let's say $25 gets hit, our 100 shares are gone. We collect the premium up up front for that covered call, plus whatever we just sold it for.
Right. Well, and another, let me break in here really fast and just give you another piece of advice like Strife give me. When Broken Strife was explaining this strategy to me, he said, what you can do is you can think about it like this. When you get assumed or you get exercised at 19, you can actually, in your mind mentally, the program is not going to, the broker's not going to do this for you, but in your head, you can look at it like this. You got paid $223 up front on 100 shares. So that's $2.23. So really and truly, you didn't even really buy it at 19. Technically, you've bought it at what, 16, 70, what am I doing? 76, 77, something like that. Because see, you can actually add that premium back to it and say, okay, you're actually in at like 16 something.
That was 1677.
Yeah.
Okay.
Yeah. So that's kind of a way he taught me. Like, I wouldn't personally use it for that because I'd be pulling that money out and putting it in my pocket or putting it in another stock. You know, I would be using it as like a cash flow wheel to put it everywhere. But it makes you definitely feel better about it, especially if it was down to like $15 or something by the time you got exercise. Because you're going to get exercise at $19. So that you're going to own it at 19. It could be trading at 15, but you're going to own it at 19. But technically you own it at 1677. But the moment that that's done, you could start then immediately selling covered calls against it. So you're in this for the long term. Stocks go up, they go down, you're red, you're green. You know, you bought the dip. I mean, shoot. You know, it could go anywhere from here. You know, you but what we're thinking is, okay, that thing could just sit there for years and do nothing, or months and months and months. What we're trying to do is collect money around the clock on it. So so money is always flowing to us, one way or the other. While the stock's down, let's say we got assumed at $19. It's trading at $15 right now. We're selling covered calls at $19 just to try to break even on the stock, but the covered call is paying us $300. So as it's trading at 15, it's never going back to 19. We're just sitting there collecting on our break-even price. Now, you don't have to do that. You could still go a dollar or two above, you know, just depending on what you want to collect on your premium versus selling the stock. So, but another strategy that I use or have been studying and will implement, especially on a cheaper stock like this, is not only will I be bidding at 19, I may even be bidding, you know, at 16. So while let's just say this one gets exercised and we're trading at 15. Well, now 13 is $200. And I look here on my chart and I see, okay, $13 is a good support level. I'm going to be bidding for another 100 shares and collecting $40 more at $13. So now I'm double dipping. Basically, I own 100 shares I'm red in, but I'm collecting covered calls, so it's taking my loss away, almost, depending on how long you got to keep cover calling. And then on the downside, as it keeps moving down or up, I'm still bidding on lower prices and collecting premiums on a lower price to assume more shares.
Yeah,
I hope that makes sense.
The
Yeah,
averaging aspect of
Right.
long-term trading.
right,
You
right.
know, which is brilliant. You
Yeah,
know?
yeah.
It still allows us to make some money. All while the stock is coming down.
Let's say,
Um,
yeah, exactly. Now, let's say you want a total of 1,000 shares on Riot. You want to accumulate 1,000 shares. You know, well, you start with 100 at 19. It falls to at 16. You start selling puts at 14 and 13 and 12, and you're collecting all those premiums. If they don't come to you, oh well, you still collect the premium. If they start coming down, you start collecting the 100 shares here, 100 shares there, all while on the reverse side selling all your calls. So you're selling the calls, you're selling the obligation to sell all those shares that you're collecting, at the higher prices, because you've got to remember you are averaging down as the price goes down, right? So you're not only collecting premium on the downside, but you're also accumulating a few hundred more shares, bringing your cost average down. Now you can start really making the dough as far as like on the sell covered call side, offering those shares back out. Sorry, Neil, didn't mean to cut you off.
No, you're good, man.
Yeah, Broken Stripe had a perfect point there. Let's say you're not in a big hurry to sell it, and let's say let's say you own. Let's just be comical here. Let's say we owned at $25. It's trading at $25.78 right now. We're looking to put a cover call out there, but we don't really care to sell it anytime soon. We're patient, right? We got plenty of money in the bank. We're chilling, thinking, okay. Well,
go out to like March or June, maybe.
Let's go to March, and let's look at what we own at $25, and by March we're looking to sell this at 29 or 30. Actually, the $30 is selling for more than the $29. So you look at that on 100 shares, it's going to pay you $670. And if you had, obviously 1,000 shares, which is a lot, would be $6,700. It's a lot of money for just saying, hey, I would be willing to sell them if it goes there. Not only are you doing that, you're also making $5 on your actual 100 shares or 1,000 shares or whatever. So you're making $500 there. You're making $670 just for promising to sell them at that price. That's a huge difference. That's how you really start making your portfolio grow. It's not about buying and holding forever. It's about playing the premiums in the middle. So you as you're accumulating. Hang on, I'm reading Strife's thing here.
Yeah, I was just reading that too.
Really don't want to tie up your cash and you get trapped in some bad ones. You can buy back underwater and sell out further to break even back into the money to get a better chance. Yeah, I agree. And Strife, we'll go over that very soon. I just, I wanted to kind of try to cut and dry this first part of the wheel strategy, and then kind of go into more advanced stuff like that later on.
Yeah, basically this here, very simple.
It is.
Very
Once
simple,
it clicks,
dry,
it clicks, like it took me a while. And Stripe, I on and off with Stripe, trying to learn his, what he was thinking, his frame of mind on it, and then like one day it just like clicked, and I thought, man, why? I've been doing this all wrong. Like I have really been not collecting the money that I should be collecting, because I was already going to buy the stuff anyway.
Yeah.
And why I'm not collecting that free money, I don't know. It's just there. It's just there for you to collect. All you gotta do is click the button.
Yeah. I mean, and for me, it was like options were like a scary thing for me.
Mm-hmm.
I was a little hesitant.
Yeah.
And it may have contributed to some of my my thought processes as going, like I don't understand like a call buy, on the buy side, or I mean and like a put on the sell side. Like it was driving me nuts, but I think it was also because I was just not fully understanding it. But now, dude, like I've watched quite a lot of videos, and even just watching that wheel one, that was
Mm-hmm.
eye-opening for me. It allowed me to realize that, dude, this is going to be a very
It's lucrative.
very nice process. And like the the money's there to buy these stocks. So I'm not afraid if I do get in,
No.
because the idea was to get in anyway.
Yeah,
You
that's
know?
that's the best part is once you actually
Yeah.
get involved, because then you really start making the money, and that's when your strategy really comes in, and you really start just banking. The only downside to this strategy is you have to have a pretty good bankroll. You can't. It's really hard to find the riots of the world. It's really hard to be involved in stuff like this right here all the time.
Mm-hmm.
This is just a very volatile time for Riot. So to really get into the ones that are going to pay you good, they're few and far between as far as like finding ones like this. We can buy 100 shares for $2,500 right now, and that's doable. But you get into 100 to $200, you're looking at $20,000, $25,000 in a cash account just to be able to purchase that. You have to have the bankroll. You have to have a big enough account to purchase these stocks. Not like mine. Like right now, this is my my account here. I've got stocks because I was just trying this broker out, and I absolutely love it. I've got like 2 shares here, 1 share, 2 shares, 3 shares. It's kind of funny how I've spread $1,000 out because that's all I put in this account to begin with, just to see how it worked out, and it worked out pretty good. I'll show you these positions here. You can see.
Yeah, basically, Mike, that's it. Stripe said it correct. You just play it again. If let's say in 30 days, Riot doesn't come down to hit $19. You've collected that premium. That's yours. It's yours to keep.
Mm-hmm.
And then you just do it again.
Yeah.
You pick another. You pick another option to play.
It's just creating just create the cash flow.
It's beautiful.
Yeah, and that's all you're trying to do is create cash flow. When you own a stock, you're going to be green, you're going to be red. It just bounces back and forth, and it's enough to give you a headache. So this allows you to be collecting a cash flow on both sides, really, because even if you're bidding lower, you can still be collecting premium lower, and you can be collecting cover calls on the sell side. So yep, and you just keep rinse, wash, repeat. If you didn't get hit at 19 and it's still trading up there, you can hit 19 again. Go 30 days out again. And if it's trading real close to 19, you say, well, I barely got out of that one. We're going to go to the next line of support on the next 30 days, which is $15. And the idea is, if you can get out just collecting premium, that's great. That's great. That's not as much money, and you definitely don't make as much money doing that. But you're gonna. It's cash flow. That's all it is. And let's set you up to where you have at least 5 stocks that you're able to do this every 30-day cycle. Every 30 days, you are recycling in and out. Whether it's, all right, I'm in, all right, so I got exercised on 3 out of my 5, so I'm actually on the 100 shares. So I'm actually having to cover call these, and then I'm still just collecting premium on the put side on trying to bid for the shares on one side. So that's my advice is to get to a point where you could have 5 stocks that are just just grooving with this strategy. Now, what are the best stocks that groove with this strategy? Sideways is the best, because if you just want to concentrate on collecting premium, sideways markets are going to be your easiest bet. Now, if you actually want to own the stock, or let's say a stock is dipping, like General Mills was, or Grubhub. Grubhub sold off really hard. Let's say you want Grubhub and it sold off. Let me pull a chart up of Grubhub real fast here. So let's look at Grubhub. See how it's selling off. Who knows? Grubhub's a good company. It's taking some hits right now, really gapping down as it's falling. We got some good support right here at 67. You know, and 50s, the 50s, we got good support. So we know that it's already low. We know it's already been selling off. So the bet is that, you know, if it continues selling, you know, right here would be a beautiful spot for a bid play on the put side. So let's say we 67.50. So let's go over there. Let's see, grub, and then let's go out. Yeah, and let's go to. I don't. Did I type that in wrong? Grub.
That looks weird. I don't think you did, but why is that option chain looks really weird.
Yeah. Okay. See, grub is one that really sucks.
There's really no options here, man.
Yeah, so I mean, if you let's say you want it in at 65, I mean you're gonna get paid 70 cents, basically $70, just to say, okay, I will buy that at 65. You know, the chances of that finding support right here in 30 days, actually that's not 30 days, that's March 21st. So, you know, that's a little, I don't like that. You know, I wouldn't be comfortable trading that one. And, you know, there's just, this chain is just really screwed up. And I'm not sure why that is. That was just a bad one.
Get it.
A lot of your dividend stocks really suck at this because they're already paying dividends. So expect one that let me just give you an example here. One that Broken Strife and I were talking about was AT&T. So he was explaining to me he's got, you know, some shares in AT&T. I've got 2 shares in AT&T right now, and I'm actually in pretty good profit with it a little bit. So let's see. AT&T pays. What is the dividend on AT&T, Strife? Is it 50 cents? So it's 50 cents a share, something like that. So every quarter, you're going to collect 50 cents a share just for owning the stock. And then on top of that, you could sell some covered calls if you owned 100 shares. So you could essentially you're collecting the dividend and you're collecting the covered call. And let's say it goes out in, let's say the dividend pays out in March, so you wanna be somewhere close to your dividend. Actually, that's too far out. Let's just go to 1 month there. You know, you could go right here and say, okay, well, the dividend's paying 50 cents, so 30.50 is paying 44 cents. So you could go right here and collect $44. Just for, you know, you could collect the dividend and your covered call. 52 cents. 52 cents. Any questions?
Interesting.
And you can,
AT&T.
yeah,
AT&T might be the one.
yeah. Strife's all over the AT&T. He's got some. I hope you don't mind me talking about it, Strife, but he kind of taught me into it. Of course, I've only got a couple of shares in it,
The
but
premiums on it, though, like to assume that it was like it's not worth it.
no, it's. But here's the thing you got to remember: it's a dividend stock, man. It's one of those that really goes sideways most of the year. So never are you really ever going to be down too much in this company. You know what I mean?
Nah.
So it's one of those that you can just basically collect free money on just for the heck of it, just for owning it. and the dividend pays 52. So Strife sold his call at 30 for $66. So he's got, what was the date on that, Strife? Do you know? Is it the 26th of February? Oh, right here it is.
Oh wait, I'm not looking out 30 days from now. Holy cow! Hold on.
So it's trading at 61 right now. So he basically collected $66 for just saying, hey, if price closes above 30, which 30 is right here, in 30 days, which is the 26th of February, somewhere close, I will sell it. And
February 19th.
February 19th. Okay, let's go back a little bit. Boom, February 19th. And
50, well, right now it's 54.
54. Yep. But, you know, it's closer because we had a couple of days where it pushed up. So at $30. So if it's below $30, he's going to keep his $54 and just walk away still owning the 100 shares. But if it closes above $30, I don't know where Strife is as far as like what price he owns the stock, but he'll get to sell it for the profit of selling at $30, plus he gets to keep the $54. So it's a win-win for him on that side. And if it goes down to, let's say he's in at 20, let's say his average is $26 and it's sold off to 22. I'm sure he would probably be bidding on some premium at 22 or 23 for another 100 shares, you know. So Strife has it at 29, so he owns it about 29, so he's willing to make $1 on it and sell it. So he's going to make $150. You see, instead of just making 100, he made 150 if it sells. If not, he still makes $50. And he gets to apply that to his downside if this thing moves against him. He can say, okay, well, I'm down $50. Well, I'm actually break even because I'm down 50 cents, but, you know, my premium just paid me 54 cents. So I am technically break even. So you kind of look at it that way too. And while he's also could be bidding for premium down to like 24 or 25 once it moved down closer where you could collect more premium for that. So, you know, just something to keep your brain thinking, you know, keep you thinking about things. And once you get into the investor mindset, and why this clicked for me so well is if you notice a while back we talked about when we were talking about the bot and futures, we were talking about how the futures market was made for the farmers, right? And how if you've got a hard asset that you're really risk free. And the reason I say that is because when the farmers have hard assets like corn, they know they've got 100 acres or 150 acres or 200 acres that they're going to be growing corn on. So what they're going to do is they're going to hedge the price in November or in harvest, you know, right after harvest, they can buy next year's price for the corn by hedging a short position against it. So essentially they say, okay, I got 200 acres, it sells for X amount of bushel, you know, I'm going to have X amount of money. So then they'll go to the futures market and short a position against their stock, their corn, and lock in the price at $7 a bushel or whatever. Now, if it goes to $12 a bushel, they're just out. They still have to sell at $7 a bushel because they've locked in that price, but they've got a promise of $7. And, you know, just like with farmers, let's say that, you know, corn, let's say that half of the cornfields in America burned up over the course of the summer was just too hot and, you know, the corn production was down. The farmer still makes a killing because the market of the corn crashed because they all did bad, but he was short. He had that short position on as a hedge. So as his production didn't produce, he's making a killing as the market goes down because he's in that short position. So he's still making money. This is essentially what we're doing with stocks is we are trying to assume the hard asset which is the share, and then buy policies, kind of be an insurance company around that. So we are selling premium to somebody else that's betting against us, and collecting that premium for just just for having the hard asset. We're the ones assuming the risk because we have the hard asset. So that means we should be the ones collecting the premium, just like an insurance company. Insurance company sells you all kinds of insurance policies. What do they collect on? What do you pay every month? You pay a premium, right? It kind of adds up. You're paying that premium. There might be one or two that actually has to use the insurance, but for the most part, they just sit back and collect that premium, and that's how they make their millions and millions of dollars. So, Neil just posted up APHA and Tilray. Both the pot stocks are looking really good for us. So that's something that's another cheaper stock that's going to be a player for kind of our strategy for the year. So HA, I don't know why it does that.
So APHA is one that I don't mind owning. I was looking at a key at kind of like a level that I was looking to own it anyway. So I was looking around the $8, $8.50 range. So for me, I'm thinking, all right, well, now what do I got to do? I got to look out. I'm going to go look at options, and I'm looking at an option now for February 19th for $8. I mean, the premium's not crazy, but I'll
free money.
$25. You're going to give me $25?
Yeah.
And if it drops to $8, I'm going to be happy that I'm owning this stock at $8. And then what I'm going to do is I'll look, 30 days out, and I'll look for a premium that's, maybe I'll try to, sell this thing at $12, and collect that premium and just, keep doing it. But if it doesn't fall to 8, then I'll just keep moving it up. And as the company keeps going up. And it's just a thought that, we've got the Dems in control, and MJ should
the big one, yeah.
Potentially see some sort of form of
legalization,
more legalization happening. With that being said, so. That's why Trey and I were chatting the other night. We were talking about like some companies that we were thinking about looking into owning, and he had mentioned Tilray, and then it hit me, and I said, how about APHA? And then come to find out, because I haven't been following these companies too closely ever since I sold my holdings in APHA. So I come to find out that APHA and Tilray are merging. So they're creating one of the biggest Canadian MJ companies to compete with cannabis growth that's really kind of struggling here in the United States. So it is one of the ones that that I'm looking into. So APHA, Tilray is another one, two of them.
See, I'm with Strife too. I think, especially with the RJ Reynolds, I think the cigarette companies, if they legalize, I think legalize, they're going to have the monopoly on the weed because they are
distribution. Yeah. Big time.
So I'm with you on that one, Stroke, because all the cigarette, even what's that other company? Shoot, what am I thinking of? RJ? No, that's the one you just said.
RJ Reynolds. Who's the other?
Can't think of it, but those are the cigarette companies. They're going to have a monopoly on it if it goes big, just because they're already set up for distribution. They're already set up for, whacking their Philip Morris. They're already set up. They got farmland. They got all this stuff that they could really set it up really fast, and they got the money. That's
Yeah,
the
Philip Morris is like the biggest one. Yeah, I'm looking at it right now. Philip Morris holds. I mean, I don't know I don't know what the date of this thing is that I'm looking at, but they own or their companies like it says $47.1 billion. BAT is 31.1 billion. JTI is 21.6 million. Reemsta is 6.1 billion, and Altatus is 2.3 billion. So they're some of the biggest ones. Like BAT is the British American tobacco. JTI is Japanese, so it's Japanese or it's Japan Tobacco International. Then you have a couple other like smaller guys, smaller players in the tobacco industry. Dude, you know what another play could be? Is the ET? Can you buy ETF?
Cron is paying pretty good premiums too. Strife at
Oh, Chrome should be good. Yeah.
$8. $8 looks. It's only paying 6 cents for the 12th. Let's go out to the 26th. $13. So $8.50 would be $23 for 100 shares. That's not a bad buy right there. $8. $8.50 even, like right here. That would be great. And the premiums on the sell side are about $1 for 30 days out.
Altria Group.
Yeah. So these are all great picks, and this is what is really great about, having these meets and bumping our heads together on this stuff, because we can find these things. They are out there. The premiums aren't great, but the stock itself is cheap. So I myself wouldn't mind accumulating Cron at 8.50, 7.50. I would be bidding all the way down on this. So, for me, if I could accumulate 500 or 600 shares, even 1,000 shares, you're still looking. If you had an average of $7, 1,000 shares, $7,000. It's not a huge position. And then you've collected that premium all the way down, and then you get to turn around and sell, $1.23 each round. That's $1,230 on premium that you get to sell.
Yeah, as it's moving back up,
Yeah.
Yeah.
So that's I definitely like Cron. I like these companies like this right here. I don't fear averaging in on a long investor kind of
with the long-term investor mentality, it's a lot easier. Also, the other thing too is what it does too is it allows us to just use our ability to just kind of read these charts. Technical analysis really comes into play here, and it's just, hey, what are our levels? Where do we want to buy this company? It's different than if we're sitting here trying to day trade, but we're kind of looking out a little bit further now, and we can use the higher time frames and just kind of see the major key levels that we want to play and we're willing to buy, because we know with those levels, if we do get exercised, we have a pretty good feeling that the company is going to continue, just going to come back down, find that support, and then move back up, and then we can use our covered calls to get out of the position.
Right. Let me go back here just for a second here. Let me zoom back.
Electric energy companies. Yeah. It's kind of what I was looking into also. Some electric energy. SunPower actually is one of them.
So yeah, and I want to go over the step one was how to make investing a cash flow business, collecting premium. And that is the cash flow secret. We're collecting premium. We're keeping the money wheel turning regardless of whether we're red or green. That's the key. And then number two, I wanted to go over how we manage the risk. we collect the premium, right? So we're actually hedging the premium against our losing position. Collect that money up front. That way we can do other things with it, and we can look at a red trade and not think as bad about it. When we have collected so much premium off of it. There's still risk involved. Don't get me wrong, but obviously as a long-term investor, you're kind of used to holding red and green positions. It's just part of the game. And then step 3, this was the hardest for me, how to change our mindset, right? We want to be day traders. We want to be in and out. We want to be, making money on a daily basis. I have learned through the hardest ways possible that the more you zone out, the more that you kind of like on Google Earth, when you like zoom in on your place and you kind of start backing out and you get like all the way out and you can see the earth. That is where people like Warren Buffett make money. Zooming out and looking at the whole earth as a whole instead of zooming in on one location. And I've really struggled with that over the course of my trading career. I really have had a hard time with that. But now I look at it, that's the smart way to trade, because the smart money's there. Day traders they're crazy, man. We're in and out. We're losing money. We're making money. I love day trading. I'll never stop to the extent of futures and our algo and stuff like that. But changing your mindset to the long term and just really stepping back and thinking about it in a more patient way really helps. So with that being said, and not even having to zoom out that bad, just 15-30 days. Every 2 months you're collecting these great premiums, and then you may own a dividend stock that's paying dividends. My personal strategy is I'm going to play these like Cron, CRON. I'm going to play APHA. I'm going to play Riot. And I'm going to collect premium off that. And then the premium that I collect will not be deposited into my pocket. Instead, I'm going to feed it back into my dividend paid stocks. So, if I can catch AT&T on a dip, I'm going to take the premium from Cron and I'm going to put it in AT&T. And then AT&T is going to pay me, not much, but, I'm working my way up. Like right now I own 2 shares. Once I get 100 shares, they start accumulating a little bit, and you start making, $200 or $300 a year on residual income, just paying dividends. So that's kind of my personal strategy, is just, can I take the money from one thing, put it in another, and just keep the money wheel turning? Because these longer term dividend stocks are going to continue to grow slow. They continue to, pay out every quarter. And that's money that you can guarantee yourself getting. And that also adds to the bottom line, the cash flow, right? That's all we're looking for. How to use our money to create money coming back. And that's what I'm going to do personally. Strike says, look at PE. Okay. PE, is that a company? Oh, PE. Oh, you're saying look at Cron. Okay. Hang on. Cron. Let's see. How do I find... I'm still learning this platform, by the way. It's so much easier on the app.
CRON.
Yeah. See, how do you get financials and stuff on here? Like, it's so easy on the app because you can just...
dude, it's weird. Like, your whole thing looks way different than what I have.
Really? I downloaded they actually have a downloadable thing. So I've actually got the program.
Yeah, I have the program too. But yours definitely looks different. When I'm looking at this. Oh, you know what? Put your you got the wheel strategy thing up.
I changed it. Yeah, just changed it. Should come up. Yeah, I'm trying to figure out how to pull that up, Strive. Seems like
Yeah, because along the top of mine, I have chart, I have options, I have note, news, and then I have financials.
huh. Are you on Apple? Or no, you're just on your regular PC?
No, my Windows, yeah. Yep.
That's weird, man.
Here, I'll, you know what I'll do so you can see it.
See, I don't like this one. I can't click the thing. Like on my phone, it's so easy to navigate through everything.
That's how mine looks. See it?
Yeah, I'm waiting on it here. Did you send it to me?
Yeah, yeah, in Discord.
Oh, okay. Looking at the wrong
I
place.
just went live. I just put it live on Discord so you can see it.
Okay. Let's see here. I don't see anything. The stream has ended.
Dick, just that.
Oh no. See if I can get.
Got rid of my screen. Hold on. Try it again.
Mike, are you still with me? I had a really good turnout tonight. Thank you to everybody that hung out with us. I'm the kind of guy that when I find something that I truly believe in, like I have to share it with other people, especially the ones that I feel like are that I've grown to know and that are just, we're all just trying to make a living and make something. Neil and I, we don't make, this is just our time, man. We just, we share this because one, Strife was nice enough to share it with me, and then I started really researching it and studying on it, and so Strife, thank you, and that's just it, man. We just want to share it,
Echoing. Yeah, I think it's because of Discord.
Oh, is it? Am I echoing? Sorry.
Yeah, do you see the chart right here real quick? I just want you to see that real quick.
Dude, yours looks good.
Yeah, I don't know why yours looks so crazy. I think it looks way different.
Yeah, it does. That's very strange.
Mm-hmm.
Did the echo stop?
Yeah, like even off here, like I have my watch list. I have an entire watch list of stocks. And then up in here, this is like where the financial stuff comes in. You can see the balance sheet, the cash flow, annual, cumulative. Break it all down. Do you think we have to reach out to Weeple for that, or is it something in here that we'd be able to tell?
Yeah, that's a good one, Strife. I will. I'll research that. I will research that. Neil, what I'm doing is I'm silencing my Discord because I think I'm causing an echo. So I have to mute the mic on one end to.
No, it's okay. Sorry, man. I'm actually just looking for the. This is what I wanted.
Are both of us echoing, or is it just me, or is it just Neil?
Dude, so this is the MJ ETF.
Nice. It's only 1982.
Mm-hmm. Yeah. So I traded this for a little bit. Back when the pot stocks were getting kind of hot back then, because I liked it. I liked it versus trading like Tilray. It gave me exposure to MJ without the crazy price moves. Even though this too it had like a what am I talking about? Like the spread. The spread was a little wide. Maybe I think it was like 5 or 6 cents. But I mean, like this one here, let's say you were, you wanted to own some of this ETF, at like 1650, maybe like 1550. Let's see if we can go out. I think, oh, we're already out. Wait. I guess it'd only be like $20, but that's what you get for something that's kind of a little on the cheap side, around 19 bucks, around 16. Strife, I got killed on Tilray, man. I don't want to talk about that one. That was a really bad trade. But actually turned out it would have been good if I held it. It would have been good, but I got killed. I got killed, and I sold it. So I got emotional. I knew I had a feeling where it would go. I just got emotional because of the way that Tilray, that stock moved. So, it moved quick.
Okay. I was trying to buy some Bitcoin over the weekend, but the broker hasn't cleared me to buy anything. So that will be something in the future as well. We will be doing some investing in Bitcoin, not like huge amounts. I'm like an investor. Remember, we're in that mindset now, so we're looking to just pick up heavy dips and put it in the back. What I love about Bitcoin is you can sell and buy as much as you want. $10 here, $20 there. You can buy however much you want of it. So that's something really cool that we're gonna.
I still haven't even gotten filled on mine.
Well, you're bidding pretty low.
34.5, which is the most recent dip. 34.5. BTC USD.
Do you want us to start a new channel? Wow. That's cool. Got some cool colors going on. Would you guys want us to start a new channel in Discord called like Investor Club or something like that, where we just talk about this stuff here? Instead of trying to do it in the general chat, we could Webull. They've gone full crypto, so you can trade it straight on Webull. And it's free, obviously, to do. Oh, one good thing, Strife, I did figure out is Webull does not charge anything to buy and sell options. I don't understand how they make money, but
Yeah, I don't either, dude. I think. Are we
'cause-
getting commissions on our stocks too? Because I don't remember getting charged for those either.
no, there's no commission there. I
Yeah.
think they spread it and make on the spread, but here's the thing. I guess they're making on the spread of the option plays too.
Well, no, you know what? You know what I noticed? Like if you go back to stocks, like their level 2 data is something you have to pay for.
Yes. Yeah, you
You
get it
know,
free for a
so-
while.
But I don't mind not having the level 2 because I never really liked watching level 2. It moved way too fast for me. I actually just prefer watching the what is it called, the money flow or something like that, or
Yeah. Level 1. I like
whatever,
level 1.
whatever it's called. Yeah.
Yeah.
Yeah, if I go back here, this here, time and sales.
Yeah. I watch the level 1 more than I do level 2. Bring up some option chain. Okay. Give me a
There
second
you
here.
go.
Oh, yeah, you can do it on your
Why is there
screen.
no options? Oh, that's TRTC. Let me go to Crone.
It's fucking
Here we
cool.
go. This is Crone. Oh, Ford. Okay. Let me go to my watch list here. Oops. There it is. And we're looking at this is the 22nd of January. Just give me a date if you want.
And Mike, if you got any questions going forward, just I'm always around.
Let's go to February 19th. Here we are.
Dude, your option chain is so clean. It's not even fair.
Did you mess with the widgets? Is that what happened?
That's all it gives me. Like, it started out like this,
Started out like that.
and then I had to add a blank page and then add the option chain to the widget.
Oh.
Yeah.
Yeah, this is how mine started out.
It's not even fair.
Pretty sure this is how it started. No. I could see. I want me to say my layout and then I can send it to you maybe.
Yours almost looks like it's integrated with
Oh, it's a $10 call. $10 call is 46 cents.
how's that, Strife? That's about as big as I can get it.
Yeah, sorry, man. Yeah, you were on my really large screen right now, so that's the reason why it's like this. That might be also why my thing looks like this too, Trey.
Yeah.
No, but you have a huge monitor too.
What's the bid and the ask?
The bid is 46. The ask is 47 for $10.
So, very small spread.
Mm-hmm. Yeah, penny.
Mm-hmm.
Puts are a little bit wider, 3 cents.
Yeah, isn't that nuts? They're literally just making a penny.
Yeah.
But I guess you do that enough. Dude, did I tell you I got a check from TD Bank for a penny?
Really?
No joke.
Was
I'm gonna-
was that from the time that you gave them a penny to keep the thing running?
No. This is the banking portion of it. Like, I had a loan through them and I paid it off a while back. And they sent me a check for a penny, like I overpaid them a penny. So I'm literally
funny.
gonna take that to the bank and cash it.
Yeah, why not, man?
I'm gonna make some banker's day. If I want to cash this, I'm gonna be dead
They wasted
serious
more
too.
money sending you that penny, with this
Mhm.
it cost of stamps.
Let's see if they at least got a wheat penny back there. So a wheat penny's worth about 2 cents right now. Price of copper's going up too. Anybody's got any copper? Wheat pennies, stuff like that,
Like the cost of like all those gazoon like lumber's up too.
Here's one thing you can look forward to in the Biden era is watch for the price of junk metal, the price of stuff to kind of go up in like hard assets like silver and gold and metal and platinum, stuff like that. Just stating the past in the Obama era, at least the first 4 years, even junk metal was up to $15-16 a hundred for junk. So you're looking at cars right now, junk cars being worth what, $2 or $3 a hundred during the Obama administration. That metal was up to like $16-17. We haven't seen that since we started this bull run. See, they're ripping those out for the platinum inside. Those bring the money. And then when the price of converters were up back in 08, 09, they were up like 160 to 300, $400. My grandfather owned a junk, about 25 acres of cars that he just collected over his life. He crushed out 16 or $17 a hundred, and he got the converter off of every car that he crushed as well. So that was he made a lot of money. Could see that again. I'd say it's about time too, especially for the people who deal in that stuff, like own junkyards or own things of that nature. They've been really having a hard time the last 8 years or so. They go in about a 10-year cycle. Hit it really big and then nothing for years.
What you think, Trey? Would you like to own 100 shares of Pfizer around 34.60?
Absolutely.
I like it. 34.50. Let's see.
Have to give that one some time too, a month or so.
It's about $34.
Mm-hmm.
You could even do 30. You could do 35.
But see, here's the thing: it's a dividend paying stock, so
$64.
it's going to pay about what the dividend pays because the dividend is like 38 cents. But I mean, that's $38 every time it pays a dividend, and then you're also making premium on trying to buy it, and then you're making premium on trying to sell it, and collecting a dividend too, if you don't sell it. See, I think with dividend stocks, if I was going to sell, I would make sure to be strategic and place my covered call like a day after or somewhere near after the dividend paid. See what I'm saying? So that way you collect the dividend and collect the premium.
It wouldn't be bad.
Then you wouldn't have to worry about it. If it sold after the dividend.
Mm-hmm. Yeah, you collect the dividend, and then it sells. You collect the money on the buy.
Mm-hmm.
And you got money on the premium too.
And you sell the stock for the price that you picked to sell it for, so you make profit there as well.
Oh.
All turning the money.
Dude, this is gonna be wild.
I like that strategy, Strife. That's a cool strategy. Because that way you're basically doubling your dividend.
Mm-hmm.
Just for owning it.
Yeah, so with the dividend paid out here, right? So this was 11.5. What was the next dividend? Oh, they don't list it.
What was it? 38 cents. I think it was 38. Let me look it up on my phone real fast.
Oh, there it is. 38.
38.
Yep.
Yep.
It's not a bad dividend.
Yeah, yeah, that's right. It does, and it drops the price sometimes, but it's more times than not that when the dividend pays out, the stock price drops because they're pulling all that money out to pay the people, right?
Mm-hmm. Yeah, look at
So
that.
so yeah, being able
Most
to,
of these are dropping.
yep. Very rarely does it just pay a dividend and keep cruising up, you know.
Yeah, I think this period right here, you see this one right here
Mm-hmm.
in May of 2019, did that payout there, and then kind of just caught some support, which you could see it. Look at that support.
Yep.
Yeah.
That's like Strife says,
Got it.
whatever the dividend is comes right off the stock price.
Mm-hmm.
So having kind of a strategic to know, like, all right, well, you need to know your stocks. You need to know when they pay out. You need to keep up to where, if you're gonna sell covered calls on them, to be strategic enough to know that you're probably gonna get a sell off
Yeah,
afterwards.
I was just want to say, like, marry these stocks. Marry the ones that you're gonna want to do this with and understand them.
Mm-hmm.
You know.
Yeah. Well, and don't even worry about getting out of them. Just recirculate the money. Just
Yeah.
recirculate the premiums. That'd be my goal, especially once I get up to 100 shares on, these dividend paying stocks. It's not even to sell. I just want to collect premium. That's it. I want to keep them.
Mhm.
I just want to use them to generate an extra income. And once you got enough of them going, you're $200-300 in just dividends on a 50 cent per share stock that's paying a dividend. You're looking at $200 or $300 a year, and then you start adding the premiums in. There's $600, and then if you own more than 100 shares, there's $1,200, and then you got 5 of them going. There's and that's just dividends, not even talking about how much you may or may not have grown over the year and the stock itself. So
Mhm.
so many money wheels here. There's so many money wheels, and protective money wheels is the key. Like, we're looking at ways that we can generate money while holding the stock, and that's what we're going to do here.
Here you go. Here's another one. Here's another one that I wouldn't mind owning.
What is that? Qs, triple Qs?
Triple Qs. Yep, triple Qs.
Oh, you should look at TQQQ. Those things
Oh
are
no, yeah,
paying.
I know. I was looking at that, but here's one. Here's one that, like, I definitely wouldn't mind. T triple Qs is the bull.
Yes, the Nasdaq, I
bull.
think.
Yeah.
Look at the option
This is
chain
the
on it.
Nasdaq too. So you got TQQ, T triple Qs, and then you got the SQs.
SQs are the opposite, though.
Yeah, the inverse of it.
Yep.
The inverse of the T's.
But if you look at the option chain on the
Crazy to
T
have options
T
on
triple
these.
Qs, look up T triple Q and look up the option chain, man. It pays.
Yeah.
It
Mhm.
pays. And
Yeah, dude. This one's crazy. So, dude, I mean, definitely wouldn't be against owning this here, man. 160, like 165.
yeah.
It's not 11. I don't know how to make it one, but yeah, $1,100.
$1,100, man, just to throw your name in the hat. Just to say, hey, I will buy that there.
Wild. I mean, I do anticipate this coming down to 165. It's gonna come down. You know,
Oh,
we
yeah.
may even see that. We may even see that this coming week.
Dude,
165.
I foresee a pretty heavy pullback coming.
Yeah, I'm seeing that. Dude, you saw the VIX, right?
Yeah. I'm anticipating. We just made a new high.
All right, Strife, have a go on, man. I appreciate you showing Trey this, and you know, it's been
Yes.
very helpful.
Thank
Thank
you.
you, thank you.
Yeah. We were supposed to only go for an hour. Here we are. An hour and 44 minutes. Me and Neil, we just get into this stuff, you know?
Yeah, dude. I love investing.
So
Love investing.
Thank
Dude,
you, Strife.
Can we see the VIX? Oh, we can see the VIX.
yeah, this charting system's pretty good, man. I like
Dude,
it.
what the hell? Oh, this is 1 minute. Here we go. Here we go. So we want to see the VIX, right? We want to see what.
I also apologize for the echoing. I'll try to fix that next time. I know that's aggravating to listen to. So
Look what this thing is gonna do, man. Look at this thing. This VIX is getting ready. Is getting primed for a move.
I'm glad, Mike. I'm glad. That's awesome.
So, dude, this is what I was showing this to. I think I was showing this to you. But I was sharing this with my brother-in-law too. And I was letting him know. I was like, dude, you know, this market's gonna get ready for a pretty significant move.
Mm-hmm.
You know, like I'm wondering, does this gap fill? You know, this one right to here. From here to here, is down to 18.
Oh yeah, I see what you're saying.
So this is a gap. So if I opened up my TD tray, you'd see an alert that's sitting right here.
Yeah.
I have an alert for once this thing hits here. I was getting ready to start shorting, like pretty much everything. I was getting ready to short. I was going to short the S&P. Yeah, well, this is the S&P, the VIX. Get ready to short that. You can already see what's happening.
Uh-huh.
We're coming down. We can't break this level. This is a level of support. You know, we are holding this level.
Yeah.
We're holding this level of support. But that level of support breaks, and we're going to have another couple days of up, an up move maybe. But I'm fully anticipating this happening, this thing going up.
Yeah. Yeah.
You want to have this in your arsenal, man, because if once this thing goes up, man, we're going to have some great buying opportunities, man. Like you're thinking like Friday was nice with all those with the selling off that happened, dude. We're going to have
Wait
some
till it
more.
gets back up to $40 or $50 or
Yeah, this thing's going to get up. I mean, I don't know if we anticipate 85 happening. But the only way I see 85 happening, like a full-on another market crash, basically, would be,
85 was a pandemic, right? I mean, 85 was
pandemic. Yep, 85 was a pandemic. And if you scroll all the way back to the left, there was like 36 was 2018. So remember 2018?
Yeah.
We had a minor market crash back in 2018. We also had we had two market crashes actually in 2018. We had February, and we had December.
Yeah, and it's only the only high it's ever been, even higher, is back in 08.
08, yep, 08. And we have these periods. We have these periods of 2013 was a very volatile. Dude, 2013 was a very volatile year.
Mm-hmm.
The market was just not really certain what it was doing. 2011 was another crazy year. 2010, we do it every single year. Almost every single year, every other year, there is a market buy-in opportunity.
Yeah, every year.
Like the market, that's the thing. You just wait. You just sit there and you wait
and collect
for
premium.
these opportunities to happen.
Now we know we collect premium.
Yeah. You collect the premiums, follow along with like certain indicators like this, dude, like the VIX, man, the VIX is going to be very helpful in situations, especially with what we're trying to do. We want to know like what the market's going to do. So the market, more than likely, I think is going to have a move, down. We're already starting it, but I think we have a pretty significant move where like these opportunities for us to get into a company, into a stock, is going to be present. We're going to have an opportunity, to get in, grab a company, but obviously it's going to be a company that we want to own. So for me, I think starting Monday, I'm gonna try this out.
Yeah.
I'm gonna try this out on Etheria.
Yeah. Yeah, absolutely. There's no reason not to. We've gone through the strategy. We understand it. We know exactly what to do. We know that there is no panic. Everything's very slow paced. It gives you time to think, time to call your colleagues. If you're in a situation, and this is, I'm talking to anybody out there, this is the time where like you reach out and you say, look, I'm in this and I'm thinking this. We can strategize, man. Let's make it a community of like, we're putting ideas together, and if you're in some crazy stuff that you just gotta try to that you're worried about, that you gotta try to get out of, let's hash it out. Let's try to develop a plan to get you out, whether it's collecting premium on the low side, the high side, whatever we got to do. Maybe even hedging some buys against it, some calls or some puts against it to try to aid you in the process. So there's so many options to do that are cheap, that may cost you a little bit on the front end, but we're going to help a bad trade turn really good for you in the long run. So when you're talking investment, you're talking about really being able to sit and think about your next move. When you're day trading, you can't. It's just you have to be mechanical. But when you're investing, you can really, really sit back and think, all right, I'm going to do this. I'm going to reach out. I'm going to call Neil. I'm going to talk to you and see what you think, and, sit back and think about it a little bit more. And then, and then just kind of start slowly putting your strategy in place.
Yeah. That's what we're, that's what this whole channel, this Discord channel is for, not just for our algo. It is for, invest in, trade in. I'm probably going to change the room from options trading to, to stock and options trading, because it's more for investing. So I want our community, I want our community to grow. I don't want it to just be just the few of us. I want it to grow. Yeah. It's just a few of us. Awesome. The few of us, we're going to be stronger anyway. It doesn't matter. Like, I already like the group that we have, but, if we can grow, we can have more ideas out there, more people that are looking to do the same thing. It's just going to be better. We're always here to, share our ideas or our thoughts on your trading idea. Like if you're looking to get into a said, company, we'll look at it, in every aspect, not just the chart, but we got to look at, because, potential is present, that you could potentially be, exercised into that stock. So if you're getting exercise, you want to get exercise into a good company, one that has the potential to continue to go up and not continue to go down.
And speaking on that, Neil, that's a balance, because you want to be able to trade cheap enough, like for our sake, because we don't have hundreds of, I don't know about anybody else out there, but I know some of us are just swimming in money, but for me, I don't have hundreds of thousands of dollars to just put in the market. I wish I did, but I don't. So I have to, there's that balance of like, I need to find a good company, but it needs to be a cheaper traded company too. Like, you know, it's like it's so hard. Like even Riot,
Well, I
right?
think
That's
that's
not.
why. I think that's why. Like I said, like let's do this as like it's a small account challenge, right?
Hmm.
It is for the guys that may not have tens of thousands of dollars to put into the stock market, but may have maybe $1,000 to $5,000 to throw into an account and be able to maybe make a couple trades.
Yeah, yeah,
You know?
yeah. And you could spend $1,000 really fast in even buying one share at a time. I've almost spent $1,000 in Webull, and I've only got like, I don't know, like 8 times 2 is 16 shares total.
Yeah.
That's all I got right now. So, and currently I'm down like 90 cents on them. So, I mean, I'm not buying them to trade them today. I'm just trying to get my foot in the water. That's all, and slowly build into it.
Mm-hmm.
Because I want to start building into it as Neil showed that this thing, the VIX is getting ready to spike. When it spikes, we're going to get some more buying opportunities. And I don't want all my shares in it on AT&T at 29. I want to be able to buy in at 20 or 22 or 18.
26. So
Yeah,
let it come down and just keep buying. Like I'm already planning for like these shares that I have. Like I have Fastly, FSLY.
Mm-hmm.
I'm in that at I think that's my blue line. I think that's where I'm at. I don't know where I'm at on. I don't know how to tell. I'm not trading.
I did buy that Grub. I told you I bought Grub, didn't I?
Yeah.
I bought Grub at, I'm way down on it though. I bought it at 74. And we're trading at 71 right now.
Oh yeah.
So I'm going to pick up some more in the 60s. When we get down here in the 60s, I'm going to pick up some more. We get down here in the 50s, I'm going to pick up some more.
Yep.
That's the whole thing. Like right now, I'm down on Grub. Let's see, what am I?
I think Fastly I'm in at, oh, there it is. $90.50, and we're currently trading at $88.21. Had a great opening on Friday where I was like, wow, I made a great trade. We were up at $95. And then we sold off in the afternoon. But that's fine. I'm already planning on buying more at 65. I'm planning on buying more, if it comes all the way down to 25. I'm a layer into this puppy, and I'll have a really nice average in FSLY. I'm not really down that much on a lot of these things here, man. Ford put, but I think Ford put comes down this week.
Yeah. See, I'm not. I'm only. I see the thing with this PC version is I can't really see.
Oh, if you go to there's like a money bat or no, there's a thing called account.
Oh.
On the left.
Oh yeah, here we go. Thank you. All right, so you can see right here, I spent $600.
You hit more, and then it go to account. It'll tell you exactly what you're looking at.
Yep. So, we can actually short stocks on Webull.
Yeah.
Nice.
Yeah. I mean, if we ever saw a company that was traded way outside of where we thought it was, and then we can just we can short it, dude. Absolutely, man.
Dude.
Yeah. Right now I'm up $2.30 on all of my positions.
Dude, yours looks so much different than mine.
I know, man. I don't understand.
I like yours a lot better. Mine, it shows, okay, so in Grubhub, I'm down a couple of dollars, and then the rest, I'm up on General Mills $3. The rest is just a couple of changes here. I mean, nothing big. So I've got $600 spent. I've got $1,000 in the account right now. And so I've got $400 more to spend here. So I'm just waiting to let this thing move. And once I get this $1,000 spent, I'm gonna put more money in and start trading the strategy that we discussed tonight. Also, if you're short a stock, you can do the same thing that we talked about tonight. Just reverse it. So if you're short a stock, you're wanting to buy it back, right? So you're wanting to be obligated to have to buy it back at a lower price. You can also collect premium on that. So just remember that you can do a covered put basically if you're short. And you can't do a covered. If you're going to short a stock, you need to go ahead and get your position in and be negative 100 shares short, or 100 shares short, because you can't do a call. You can't try to sell a call at a higher price. What it does is it purchases it at that price for you and then sells it back to the person. So that doesn't work. So you need to go ahead and get short and then just do a covered put, if that makes sense. Which generally, when you're going to short something, it's generally, like let's say we were going to short the Riot, because it's up really high. You would just do a covered put lower, and then let's see. Hold on one second here. Let me try to figure out my situation here. So if you're going to you were short Riot right now, what you would do is you would go out to the next month, and let's say you wanted to buy it back at 21, or collect $264, or collect $264 and collect $5 to 20, so $4 that you'll clear from shorting at 25.78 to 21, and you'll collect the 264 on the premium. So you can do it that way too. If you see a stock that's just up, and up, like Riot, and you want to get short, if they have shares short, you can play it that way.
Funny, I'm looking at some of my buys here, and I'm like, man, now that I'm looking at like a daily chart, like, damn, I bought all the way up here.
Yeah, that's the only thing I'm trading on is the daily chart. I'm just using the daily chart only for me.
Like, holy cow! I mean, it's not bad. It's not bad. I mean,
nah, you got two shares.
I know what Vail's gonna do.
Dude, what is the Vail? VALE?
Yep.
That's a good cheap stock. Doesn't really have. It's got okay premiums.
He's got okay premiums, yeah. Like where I was just highlighting on the chart. If you just, I'm gonna go. Come on.
Why is it up so much? What is Vail? What is it?
It's a EV company. So they're part of let me go to Google here real quick. Vail SA. Yeah, so they're a Brazilian multinational corporation engaged in metals and mining, and one of the largest logistics operators in Brazil. They are part of they do a lot with like the parts and stuff that go into the electric vehicle things. So
$16 February 12th is paying $42 right now to own it at 1,600 shares.
Yeah. So that's what I'm saying. Like I would look for like 16. Perfect spot. In my opinion, perfect spot to add more. And I wouldn't mind it.
No,
I wouldn't mind it.
no,
at all. Vail's a good company.
Yeah. I might have to put that on the watch. I don't know how to do it here.
Oh, if you go, do you see the star?
No, I don't have one. See, yours is just like the app.
All the way on the left. All the way on the left. You see the star? All the way on the left.
It just took me to an actual watch list. Huh.
Click on that. Click on that star. There you go. So that star opens something up, dude. Go now you got to go up to the far right. There's like 3 lines.
Yeah, list. I'll just add it on my. Yeah, I'm just gonna add it on my phone. That's just.
Oh, you can add it right there. You can add it right there. You see where it says add symbol?
Um.
Right underneath Kellogg. No, go back. Go back. Go back to the watch list.
I'm on the watch list here.
You see where it says add symbol?
No.
Down
Oh
underneath
yeah,
Bitcoin
yeah.
Cash.
I got you. I got you. All right. There we go. Did it add?
Hey, dude, your thing looks so different than mine.
I'm not sure it added.
Oh, you must have added this stuff from your phone, huh?
I did, yeah. Everything that's here I added from the phone. It's so easy to do on the phone, man. It's just this is just different. If I click like
Oh, it's a yeah. Mike had to show me how to do the dark theme.
now I found dark theme right here. Theme color. You see that?
Yep. Oh, dude, you could change it to green up, yellow down.
Mm-hmm. Yeah, this thing is awesome. I love the screener. The screener works good. Yeah. I'm impressed by the software. I'll just say that. I like it. I like the software. I'm learning to use more tools than just my chart, is what I'm saying. My chart is getting smaller and smaller, and I'm using other tools to evaluate the stock. And I think that, by doing that, it's kind of opening my mind up to other things as well. But I'm all about VALE. I think that's a good one, man. I think that's a really good one. I mean, even at 16, you're looking at 100 shares at $1,600.
Yep.
And then you can start covering calls, and cover calls are going for 66 to $1. So for a month out, actually a month out's 47 cents to buy, and about 84 cents to $1.10, just depending on where you want to sell at. You could collect.
And they have a dividend too, by the way. 15 cents.
Yeah. See, that sucks. You're not really. That's a good
It's
one.
It's not a great dividend stock, but it's also not the company, I mean, the share
cheap.
price itself is relatively low.
Yeah. Nah, yeah, you're right. I mean, as far as just an investment company, dude, I'm buying some. I mean, I'm going to let it pull back a little bit more before I actually start putting some shares in.
I just kind of got in just to get in.
But I'm going to buy some.
Yep.
I'm going to buy some of it. A couple shares of it. I like it. It looks good. So, all right. Well, there we go. See, we added another one. Neil had it up his sleeve the whole time.
Mm-hmm. CCIV is just a roll the dice, dude. Don't even trade this one.
No, I want more steady companies than that.
Dude, it's a SPAC. It's a SPAC company, SPAC. So they're basically just an investment firm. Like they take they help take companies public. So
Yeah.
they're in merger talks with Lucid right now. Lucid is is an electric car manufacturer, actually further along than Nikola and the other car manufacturers. They actually have a plant, and they're getting ready to manufacture. The only way they can manufacture, though, is if they go public. So with that being said, Churchill Capital is involved with talks with Lucid to help bring them public, and to do it quicker. They need a company like Churchill, and because they have the backing. And Churchill is actually has a bunch of people on their board that are not even board in the company, that are from like Tesla and stuff like that too. So it is a company that I'm just hoping that it goes to $50 a share.
Yeah.
I'm hoping, and then I'll just take it. I may even take it at 30. I really don't care. This was just a shot in the dark. If I don't make anything, I don't make anything.
Mm-hmm. Nah, yeah, man. I totally get that for sure. Totally get that.
Oh, dude, Mike just even gave us an easier way to add things to the watch list. He said, type in the stock in the search bar, up top right side, click the star, and then click watch list.
Wait. Okay. Right up here.
You know how you're searching?
VALE. Oh. Okay. All right. I got it. Yep. Sweet. Okay. Thanks, Mike.
There's a company called Medical Marijuana. It's an OTC stock. It's going for 2 cents.
For some reason, I had AMC on my watch list.
AMC is in like the movie
No.
company?
Well, it's not. It might be. I don't know.
Yeah,
It's
it's
like
entertainment. Yeah,
it's
yeah,
right there at
entertainment.
support, and it's been beat up really bad. So
Yeah, I mean, dude, AMC could return to normal, dude, with all of this stuff that's happening with COVID.
yeah, $2.30 right now. I thought, wow,
Jeez, man.
that's pretty
Dude, look,
pretty beat up.
it's beat up. Yeah, I mean, think about it, dude. All the theaters, basically, I mean, they're barely showing movie. I mean, they're showing movies in the theaters, but you also have HBO Max and Netflix, so that's taken some of the new releases and putting them online. But
Dude,
I do think AMC could come.
I'm gonna buy 100 shares at $1.50 and get paid $15 to do it. And if not, I'll just keep the $15 because they're selling for 75. They're selling at $2.50 for $75, 42 premium. Dude, you could rack the frig up on this because look, $1.50 for 100 shares is what, $150?
Is this our Monday trade?
This is Monday trade right here.
I think this is Monday trade just to test this thing out.
Yep. I'm doing it. I'm gonna collect me some $15.
I'm leaving this on. I'm leaving. Did I add it to my watch? I did add it to my watch list. All right, AMC it is.
AMC $1.50. You got to go a month out, and then we'll collect the $15 for it, and then boom, we get exercise. Do we on AMC at $1.50?
Dude, we can put it on right now if we really wanted to.
I don't think we can.
Definitely, you can. You can put it. You can place the order.
See, I can only choose day. It won't say good till canceled. So.
Oh, really? You see how mine says good to cancel?
Yeah, mine just says day. Look at there. And it does that on both my oh, you know what? I bet it's because you've got money that's actually cleared. My money hasn't cleared the bank yet. They're letting me trade on it, but they're not letting me I don't even know if they'll let me trade options, to be honest. But
oh, they should.
Oh, it's actually paying $18, dude.
18?
Yep.
Mine says 14.
Mine says 15, but the actual middle is 18, so I don't know. You might get
yeah, maybe
cleared
it
on
will,
18.
yeah.
Yep.
Yep.
They're trying to make 3 cents on you. The actual price is 18, so they're gonna fill you at 15 and make 3 cents on you. So that's
so if you're gonna do this, listening in here, Mike. If you're gonna do this, February 19th, AMC.
You went 19th. I went the 26th. That's the difference.
Okay.
I'm gonna go the 19th though.
You had 41 days.
Did I?
Mm-hmm.
Yeah. No, I don't want to do that. So we'll go 14. We'll collect $14.
The 19th is 34 days, so it's 14. You click on the right side for puts, and it's a type put, side sell, quantity, however many contracts you really want, or however many shares. 1 equals 100, 2 equals 200, and vice versa. So I will buy 100 shares of AMC at $1.50. Or not
yeah, $1.50.
Yeah. Or and if it goes to $1, whatever. I don't really care.
Yeah. I'll bid some more at $1 or something. Who knows?
Yeah. This whole COVID thing's gonna be over at some point.
Yeah, and AMC, man, it's looking like it's getting ready to get that like reversal breakout pattern where it's going to start, really gaining some steam, man.
Look at that, because this is the low.
Mm-hmm.
Recently, $1.91 was the most recent low.
Yeah, I mean it's been losing money.
It has not gone below there.
It's been losing money all year.
Mm-hmm.
And then,
of course,
then it got radical, and then now it's back low again. So, yeah, that's. I mean, they could go out of business for all I know, but I doubt it.
Do a little research here.
Yeah, research on that one, because that's looking good, man. I think that'll be a good test.
Yeah, just
kind of play around with it and see how comfortable we are in doing this strategy. Super low risk. Collect some easy money.
Looks like it's saying it's possible that some investors see parallels between AMC and GameStop. I don't know.
Oh, that's not good.
Why GameStop even went crazy.
Wait a minute, GameStop should be going out of business. What's it doing?
I know. Oh, dude, you look at that stock.
Is that GameStop?
GME.
Yeah. Oh yeah. Yeah, I don't have much faith in GameStop. Especially now, everybody's downloading their games now. So
GME, I honestly have no idea why it spiked up to $43. No idea. But definitely one that I would short. I just don't see it.
Mm-hmm.
Look at that. Look at the finances, man. You're freaking down 30% year over year.
It's insane. Wondering what they're saying, like parallels between GameStop and AMC. What does that mean?
This article
does that mean they see it going to $30 or something, or spiking like that?
Spiking, yeah. I don't care. I'll just collect my $14.
Yeah,
you can go up. I don't know. Whatever.
Yeah, $14. $14. Put that in. Hey, I'll just turn around and put that $14 in Bitcoin. Turn it into $30.
Mm-hmm.
Well, Neil, I'm about said all I can say, man. Anything else? If anybody's got any questions, we're always around. Let's touch on the bot for a second.
Oh yeah. Let's talk about that real quick, and then
in closing.
then we'll cut it.
Yep. In closing, the bot. In closing, the bot is fine. If anybody's wondering, it's just the volume is insane. So, we definitely are glad that it's keeping us out of all this mess. It sucks because if we'd have left the old version on before we cut the volume meter on, it would have taken some good trades, but the losers would have been huge. So it'd have been kind of like December. So be thankful that it's not trading right now. It needs to get back in that pocket of safeness for us to trade. And for it to get there, it's going to have to calm down a little bit.
Yeah. I mean, we just can't risk our clients' money and just say let's just trade whatever the ATR is, because we're using that as like our gauge for volatility, and if the ATR is extremely high, kind of want to be out of the market. Definitely apologize that it's just not trading because of that. I mean, I apologize. I mean, I know when we have investors that want to make money, we want it to trade as much as you do, but we also don't want to lose money and in a crazy market. So we are working on some other things like Trey was working the other night, and he sent me a screenshot of another test that he ran. So we're back testing that one, and that one's actually taking more trades over the course of the back test. So it's still in line with the ATR, but it's also trading a longer time period. So it could potentially towards the middle of the day when things kind of settle down, potentially get a trade. So we're just kind of seeing how it performs before we are going to say let's run with that.
Yeah. And Mike, I got you hooked up on that demo so you can watch it. I'm not sure, my computer reset at some point, so I don't know, but I know it didn't take any trades. So, the bot itself didn't take any trades. So.
Oh no. Yeah. Oh, you know what? It was funny because I went to log in just to see, because I wanted to see the other algo. So I had my thing up here on my computer and the other clients up on the other thing. And I was like, man, I don't have another system to try this thing out. So I logged on. And I was like, oh shit, it's at a sign-in screen. So I think you probably got that update that came through.
Yeah. I think it updated and kind of threw us all off. So potentially the demo bot may have traded, but because my computer reset, it runs in my my own system and in our network here at the house. So the demo was not gonna trade if I didn't have the physical program pulled up.
Even open, yeah.
So, and I was out of town.
Run some back tests maybe.
Yeah.
What happened, but...
So I will get that back up and going for Monday, and hopefully we'll let that thing run for a week, and hopefully it'll make us some good trades. If so, we can start building a little faith in it and let it go and put our accounts in it, But until then, we will keep back testing on the demo and just see what happens. And but I'm glad of it. I'm glad that the bot's just like, nah, it's just not worth it, because it's keeping us safe. It's keeping our money safe. And Mike's like, I'm getting in on that AMC trade with you.
Yeah, why not, man? Why not try it out? I mean, it's really risking nothing.
Yeah, $150. I mean,
and the potential that this company can go, can move up anyway, so that'd be awesome.
Yeah.
Mike, I'm right there with you, man. I'm pretty well spent myself.
Yeah.
Take the rest of the evening and kind of relax. Tomorrow is going to be a day where I'm going to do some researching with the, different stocks. Not going to go too crazy, but I want to set some buy orders for the current holdings that I have.
Yeah. Yeah.
Definitely doing that.
Yeah, absolutely. So
Definitely doing that. So
going
right.
forward, if you got any questions, hit us up, and we
Absolutely.
will let you go. Enjoy your night. And Neil, thank you for your time. And
Yeah. Thank you.
We'll reconvene on Monday.
All right, man.
All
Have a
right.
good one.
Take care. Take care.
All right, later.